Good morning, everyone. Welcome to the Everyday Trader. This is Greg. I will start off by apologizing. It is good morning, first of all. And the last several recordings, it's been good afternoon, and it's kind of dark here still. So my lighting's a little off today.
It is early in the morning where you are in the Intermountain West. Beautiful. That's the price you pay for living out in where it's so gorgeous, looking at the backside of the Tetons.
Here in Illinois, I got to get up a little earlier to trade than you do.
Yeah, I was talking to one of our clients who lives in Hawaii, and she gets up at 3:30 every morning, and like I do a class on Saturdays for some people, and she's like, yeah, I get up every morning to watch it. It's like 7 a.m. my time, so she's up. She's like, yeah, I don't mind. It's crazy. I don't know. You morning people are crazy. You know me, I'm a night owl, as you were commenting about getting some information from me last night, which included, just some updates on some of the stuff that's going on in the market and Tesla specifically.
Before I'm going to steal something before you go to Tesla. I need to remind everyone that that we're not giving you trading advice today.
No trading advice.
Illustrative purposes. We're not, options involve risk, the routine, right? Yada, yada, yada. But yes, there's been quite a bearish move in the market the last few days, particularly in Tesla. And, we happened to the last time we got together for one of these, we're talking about a collar trade on Tesla. Before you get into that, you want to talk big picture market, just few minutes first?
Well, yeah, we're seeing a tremendous rebound in the market. Is this the Santa Claus Rally? So the Santa Claus Rally is technically, I don't know if we mentioned this in the last recording that we did of the Everyday Trader. By the way, you should be liking and subscribing, hit the bell so you get notifications. The Santa Claus Rally, which was identified by the Hirsch family in the Stock Traders Almanac, is the last 5 days of trading. So that started on Friday and goes through their 4 trading days today. So typically we see a 1.3% increase in the market. Could be a one-day move. So big bullish move in the markets today. We could actually finish the week positive, and it would qualify as it would qualify as Santa Claus Rally. I'm getting ahead of myself. And that is the next question I was going to ask you is, why do you think we're rallying? Since I already Freudian slipped it. I think tax loss harvesting is happening. You and I were debating. There's some confusion as to whether it's T+2 or the day of the sale. We're not giving tax advice. We're not giving any investment advice or anything out there. But people tend to sell their stocks towards the end of the year. I think debating as to whether it's the last day of the year or 2 days before the last day of the year. I think most of the tax loss harvesting is done. And we saw a move up yesterday in some equities, and looking specifically at Tesla today, right now, Tesla's up 7%. And we've been talking about that one. That one's getting a lot of attention. The markets are green across the board. Your thoughts on the current markets, or any response to what I said there?
Well, I agree. I think we're rallying because it's Santa Claus Rally. We had such a huge sell-off yesterday. We're gaining a lot of it back. And there really was no reason for the sell-off yesterday, to be honest. I think we're just in one of those in-between periods where there's so much uncertainty, and we do have some market fluctuations, some underlying movements going on in the bond market that I think has really been the reason for the sell-off yesterday and then the subsequent rebound today. The 10-year has been bouncing all over the place, where it had settled down a little bit through December. Now it's starting to move again. But it's interesting to see, I tweeted yesterday, one of the last holdouts for the market had been Apple, and Apple finally broke down yesterday and broke below their support of 129, which was their low that they had hit earlier. And I'm not necessarily, again, giving investment advice that I think Apple's going much lower, but it's the last big tech stock to hang on. And by that, I mean all the big FANG names, the Facebook, the Amazon, the Netflix, the Google, the Teslas. They'd all broken down this year significantly, some of them bigger than others. I mean, Tesla was down 70% year to date yesterday, or the day before. Apple had been holding on until yesterday. Now it's bouncing back up a little bit today. We'll see if it holds that bounce throughout the day. To me, that's one of the key stocks I'm looking at for the market is Apple. I think another one I'd throw out there is Disney. Disney is also almost an 8-year low if you take away the the COVID low that was the spike lower and then subsequent bounce back up. Disney's just been absolutely pummeled this year. So yeah, the market's been pretty bad, and I think tax loss selling has been happening. And is it over yet? I don't know. We're bouncing today. We'll see.
Yeah, think about Tesla down, I don't know, 70% or what exactly the number is. It's huge. There has been a lot of Schadenfreude, the German word for pleasure derived from somebody else's pain or misfortune. Yeah. It has been palpable on social media. It's the negativity has been. I don't know what's going on. My feed has been very negative over the past week or so. Something's changed in the algorithm. Maybe Elon's done something there. There's some people who are very positive that were always in my feed, and I was searching for them last night because I needed some positivity to get back in, because it's hard to not get drawn down into that. But we wanted to talk specifically about Tesla for a couple of reasons. One, there was an upgrade by Jonas, Adam Jonas from Morgan Stanley. So the current price, he actually cut his forecast to $250 a share, which is well above where it's trading right now at $121.35. His previous price target was $330, and so he has three different cases. So there's kind of the price target case and a bull case. So his bull case was lowered to $440 a share from $500, and the bear case, the worst case scenario, from $150 down to $80. So still very positive. And you can search for Adam Jonas's, and this was yesterday, still reiterating an overweight valuation based on cash flow, innovation, and cost leadership. And certainly when you look at the valuation of Tesla, you can recalibrate based on some numbers, but I think there's still a tremendous value from a value standpoint. And one of the things that came across my feed is, would Warren Buffett buy Tesla? Any thoughts on that, Greg?
Well, for a long time, people said that he'd never buy Apple. I remember back in the early 2000s, and through the internet or through the housing crisis, Apple was the darling of the stock market, and Warren Buffett didn't own it. And everyone said, "Oh, Warren Buffett will never own a tech stock." And now it's his biggest holding inside of Berkshire Hathaway right now. And will he ever own Tesla? I think so. I don't know if it's developed enough yet for him to buy into it, but I can tell you from a valuation standpoint, I mean, even the trailing PE right now is in the 30s on Tesla. That's pretty impressive from, in my opinion, the world's #1 electric vehicle maker, which that trend's not changing. Right. The shift to electric vehicles. So, and I've always been, one of my key fundamental research things that I do is brand building and brand recognition. It's why I've always been a big fan of Nike. I've been a big fan of McDonald's. I've been a big fan of Apple since they've rebuilt the brand, what Steve Jobs did with the company, with the launch of the iPod and iPhone and so forth. Brand building is huge. And Elon has done it right in building the brand of Tesla. And that brand's going to stay even amidst all of the, what did you call it?
Schadenfreude?
The German word for anger,
which is enjoying other
pleasure from other people's pain.
Terrible word, terrible concept. We should all try.
So even amidst all of that, what's going on with Tesla, he's done it right, and people are going to go back to Tesla. So from a fundamental perspective, I think Tesla's a good buy right now going forward. Well, I haven't said that ever, I don't think.
Exactly. Back to the Apple thing and Buffett, that, I mean, we did an event in Dana Point, and I don't know, it was 2013 or something like that. And I was banging my fist on the podium that Buffett needs to buy Apple, and that there is no equity that makes more sense. I'm a big fan of Buffett. I do discounted cash flow analysis. I'm a little bit nerdy. I download cash flow balance sheets and go through and crank through the numbers myself. And there was no company that came out. And if you look at, Buffett's criteria, which is more than just financial, I mean, there's some subjective stuff that's in there too. And clearly, I said, there is no company that Buffett should own more than Apple. And this was before he had even a share. And so I feel somewhat vindicated. I do not have the same feeling for Tesla. I don't think Buffett would buy Tesla yet. But he buys some of these weird tech companies. And the reason he goes after them is for arbitrage. And that he thinks they might be speculated is he sees value, that they're undervalued. The price isn't reflecting the value of the company and that somebody's going to buy them. So ATVI was a perfect example. And the fact that I went to the shareholder meeting, the Buffett shareholder meeting, and, Bill Gates and Buffett are clearly, they're buddies. And I find it hard to believe that Bill didn't nudge him and say, take a look at it, because Buffett buying ATVI was like, what? Like, why would you do that? And so I think he probably got some nudge to look at them. Tesla's not going to be bought by anybody. I don't think we're not at that point yet. And fundamentally, it makes a good case. I just don't think it passes his benchmark yet. It's mostly the subjective stuff, in that Musk is so polarizing. Actually, one of Buffett's important metrics is that his businesses should be able to be run by people who are brain dead. And he says as much. He told a joke at the shareholder meeting about one of the companies that somebody had a stroke, and people who work for him called the home office and said, hey, listen, we're not sure this guy's got it together. And we went out, and Buffett says, Charlie and I went out and visited the guy, and the numbers are good. So we left him in place, even though the guy was having mental deficiencies. It was a joke. The whole thing was a joke, but he has been on record as saying you should work for companies that can be run by idiots.
In hindsight, again, thinking about that, I wasn't at the shareholder meeting with you. But thinking of that, as much as I hate to think of this as a little bit morbid, maybe the reason why he never bought Apple was because of Steve Jobs. And once Steve Jobs passed, all of a sudden, Tim Cook is a much more stable and not polarizing individual, and therefore it now passed the smell test for him. Hopefully you're right. I don't think Elon will ever voluntarily give up the CEO role of Tesla. So maybe he never will.
I mean, that doesn't mean that it's not a valuable company. And, I think there's some polarizing stuff. So I don't think I have a hard time believing that Buffett ever would buy Tesla. And, he is the most pragmatic person in the world. So he can get past the emotion, but I just don't think it meets his criteria. But you and I do, and I trade Tesla, and I wanted to share. Tesla's even up a little bit higher than since we started talking. It's moved up a couple bucks right now. We're seeing big moves in Tesla. And so a week ago, we shared a trade. For those of you that are watching the video, we shared Stop the Pain in Tesla. And the strategy that would work was, we talked about this collar trade. And so I wanted to share, I would encourage people to go back and take a look at this. So this video was recorded about a week ago. It was Tesla crash, how to stop the pain, and options collar trade. And I want to show you exactly what that trade would look like today if you had done that trade. And this is something that you can either do, where's my screen sharing? I was just complaining to Greg that I got so many windows, I can't find my screen share. Dang it. Am I sharing my screen? I'm not sharing the screen.
No.
I got too many windows open. Review the collar trade, what we talked about there.
Well, so yeah, in the meantime, while you're finding that, what essentially, as a reminder for those of you who didn't see last week's video yet, real quick summary is the collar trade is a tool that allows you to hedge risk, and in some cases profit from really volatile downward moves, which is exactly what we saw in Tesla. There we go. Now I'm seeing your sharing screen right there. So this is the trade that Eric was walking through last week with Tesla, where we would have looked at buying a February 140 long put, which was right where the stock was trading at the time. Tesla was trading at $140, and selling a $150 call option in March. We call this the vanilla collar, takes advantage of volatile moves. And this is the end result of where it's at right now.
Actually, it would be a little bit higher right now because the trade is delta positive where it is. So we put this up this morning. So the stock's actually a couple bucks higher. So the whole trade overall, even though you own the shares, you're up $330. And I'm just going to turn off the stock in here because we would have bought the stock at 140.87. As I said, this is a trade that does really well if the stock goes down or the stock goes up. So if you think Tesla's found a bottom, you're going to be able to close the options right now that you had on this for about a $2,000 or $3,000 profit. Right now, we're showing a $2,100 profit. So you unwind the trade, close the options. And if you're keeping track of your math, which is something I think you need to be doing, you keep track kind of like a real estate investor who rents property. You've got the stock, which is your asset. You got puts, which is your homeowner's insurance, and you got short calls, which is your rent that you collect. And so you need to be it's a simple math of keeping track of expenses and income. So if somebody were to close the trade now, we could get out of these option positions and effectively own the stock at a price that's lower than where it's trading now if you do the math. So right now you'd be showing a $300 profit, so we'd own it about $3 less than wherever it's trading right now. That would be your effective cost basis. And then you're left in just stock, which has just huge upside potential in terms of profit. So
let me reiterate to everyone as well, because I think this is an important concept. When we structured the trade a week ago, it wasn't we think Tesla's going down, therefore let's structure a bearish trade to take advantage of the bearish move. This was we don't know where Tesla's going. We think it's going to be really volatile. It may be bullish, it may be bearish. So let's put this trade on to hedge the potential big bearish move that may or may not happen.
Right.
We would have made money if it had gone really bullish too.
Yeah. There's you can see this risk profile. This is my profit, this is my loss, and this is the stock price. So had the stock move higher, we would have made more money. So you make, as long as the stock isn't stagnant, we had this stagnant range. So it's a great strategy and this is just one version of the collar trade. It can be structured different ways. And I just wanted to follow up with people to show the reason why you would do this is, it's a little bit boring, right? See, it takes a lot of the anxiety, and even still in this trade while we were in it, the most you would have lost is about $450, the most you could lose while you own it. So in these very volatile periods of time, it's a safe haven of a trade. And when do you do it? You can do it anytime. Do you buy the stock and do it? Great. You already own the stock. Well, it's like putting a pause button on where you can actually still make money in the downside. Now it depends, like, those people who bought it at $300 a share or wherever it was, 70% higher than now. We titled the last YouTube video, "Stop the Pain." And so somebody who was a shareholder could stop the pain, but you can also still have opportunity there as well.
I think what's important, and kind of bringing this back into Warren Buffett that we started the conversation with, comes back to Warren Buffett's number one rule of investing, and that is don't lose money. That's what this trade is all about. I know you said the word boring, and it's boring. This is not really super exciting investing. You're not going to hit 150% return on a trade like this. You'll get 20.
Oh, yeah. I did want to share,
which is boring, right, Eric?
20% return. Yeah. Boring with low risk, like almost no risk, making 20%. Hey, we're not past returns. No, we're not providing trading advice. Do the math, understand your rights and obligations. But that's the sort of thing that people are looking at. I did want to share, and I'm tap dancing again. I did want to share one insight on some of the volatility. So we're seeing massive volatility across the board. If we look at the IVU skew, we've got some massive IVU skew. One of the things that people look at for options is dealer exposure. So looking at the open interest and what dealers have to have. So we talk about positive and negative gamma. Without getting too wonky here, we are at pretty significant negative gamma for this expiration that happens tomorrow. What negative gamma means is that the market makers, if the stock goes up, their delta becomes negative, meaning they have to buy stock. Simpler way to say it is the market makers are going to chase the stock in whichever direction it goes. So if the market goes up, market makers and there is massive open interest on Tesla. This is part of the reason why Tesla's doing what it's doing. So with negative gamma, whichever way the stock goes, the market makers will chase it in that direction. So we should expect significant pressure to the upside. This is showing negative gamma. Not all expirations. Some expirations have positive gamma. So the next week is positive gamma, and that'll shift because there is a massive interest right now. There was a piece on CNBC this week talking about the Tesla options is a casino. And we don't have to be part of the casino, but this is some information that is driving the market right now. This massive negative gamma on Tesla is the reason why it's going to continue to run higher, I think, until this changes. So we'll look at where this gamma is tomorrow. And who knows what happens, but this, I think, is a big part of the story. So tax loss harvesting and this negative gamma is what's driving the market, that at least the data that I see right now.
Well,
did we keep it under 30 minutes?
Got any plans for New Year's?
Going to a neighbor's house, gonna keep it chill. So
Okay.
I'll bring some probably non-alcoholic bubbly and hang out with some friends, and then we'll probably be heading home at 12:05.
There you go. I think I told you this last year, but maybe I didn't. Maybe I'll send you the link. My son found yesterday, last year, he found a reference where that if you start last Marvel movie where Iron Man snaps his fingers.
Yes.
If you start the movie at a specific time, he'll snap his fingers right at midnight. The people that we're going with, they're big movie watchers. So we got together, played poker, and we watched 300 with them recently, just the guys. So maybe they'd be interested in that. I'm not sure if they're super fan heroes. Hey, what did you get for Christmas? What was your favorite gift? Anything? Or what was your best gift he gave, or anything stand out for Christmas? Well, I can tell you the gift that's been played with the most so far has been, I finally broke down and got my kids one of those VR headsets,
neat.
The MetaQuests.
Okay.
The formerly Oculus that Facebook bought, and now it's the MetaQuest. Okay. Yeah, so we've been playing. I don't even remember the name of the game. Among Us.
That's a fun game.
Okay. On the Oculus.
Last year my wife bought me one of those, and she makes fun of me every time I use it. She laughs. I'm like, you bought it for me. Why are you making fun of me? I got it for Alex because I'm a big Half-Life fan. I played Half-Life like 30 years ago. I thought it was the best game in the world. And so those, I don't know if there's like these like crab things that jump on your head and suck your brains out.
How about you?
Fun.
How about you? What was your Christmas?
Well, my favorite gift has to be, I got a brand new gi, an Origin gi for jujitsu. So I walked into the jujitsu club, and like 3 people were like, "Dude, nice gi." So it was on my Christmas list that I wanted. So nice. I don't know, honey. What was your favorite Christmas present? I went crazy at Lululemon for her. So I got her an outfit at Lululemon, which is, basically a mortgage payment.
Nice.
I don't know if she likes it or not, but
well, good to talk to you. Happy New Year.
Yeah, Happy New Year. I'll talk to you tomorrow. We got our end of the year thing. For those of you that are part of our communities, we do an end of the year wrap on looking at 2022 and make our forecasts. We review also our forecast for 2022, and we make forecasts for 2023. A lot of it.
And we all missed it this year. Even Horace wasn't this bearish last year. So
yeah. And I was bullish. So it's a good opportunity to sort of calibrate and check in and check your thesis. So hopefully we kept this one under 30 minutes.
We'll see.
Yeah, we'll talk
okay. Pleasure, everyone. See you at the next one.
All right. Bye.